Hi, this is Mark with my analysis for the week commencing the 7th of December. Before we go into this week's analysis, I want to go back and show you what's happened in recent weeks and months. Lots of people saying they can't trade from daily charts and they've got busy lives, but to be honest guys, that's tosh. If you make the effort and you make the plans, there are trades out there, and there are lots of trades that I've shown you in recent weeks and months that have made well over 2,000 pips from analysis done on weekly charts planned in advance. This, for example, is the Aussie dollar, and the Aussie dollar at I think it was the 2nd November post, I said to you that there was a potential 600 pip move here on the Aussie dollar versus the US dollar. Let's go and look on a plain chart. What I explained, this is a flag pattern, and a flag pattern is that you measure the pole, and this was around 600-700 pips distance here, and the theory goes that once you get the breakout, that move will be then reflected down here. Now we've gone 500 so far, so we've not gone the full 600 or 700, but I showed you how I would look for a break and close below 87.40 and then for a pullback. This was the initial move, and this went a few hundred pips. I was taken out on the retest of the area, but having shorted that again, this then went on, and as I said, it's currently 460 pips in profit. Now this was technical analysis, but supported by fundamentals, in that the Aussie dollar was under pressure against the US dollar, and lots of technical fundamental reasons I explained at the time. But if you missed it, then there was another opportunity on another Aussie related pair a couple of weeks later, and this was the Aussie CAD. Now this is on a 4-hour chart, just to show you a little clearer what was going on here. But my colleague, my trading partner Fotis Papatheophanis, last week had pointed out that there was potential Aussie dollar weakness against the CAD from a fundamental perspective. We had a breakout, we then got the pullback almost to the pip, and these are all standard M2 trades guys, and this one so far is 160 pips in profit. This is the USD on a weekly chart. You could have traded this from a weekly chart. Last week, the previous week, you'd had a break and close above major resistance. And what's it done? It's come back down, standard M2, and that is now 100 odd pips in profit from a move planned on a Sunday. Similarly, we had a break and close above a trend line on the Euro Aussie dollar. The pound CAD, I've shown you for months with this one. We were longing here, we were shorting here, we were longing back down here again. These are all standard pre-planned moves. New Zealand dollar, I showed you when price was down here, why I was looking for a pullback up here, and this one is currently 300 in front. New Zealand dollar CAD, very similar scenario. We were pulling back to a strong area of previous support and resistance. Fibonacci, whole number. It doesn't get much clearer and much more simple than this. Did it a few weeks ago, did it again last week, 200 odd pips. Euro pound, I've shown you often how we've been shorting at 80, just missed it last week. Euro CAD didn't quite get the pullback we were looking for. But the bottom line is guys, there are lots of trades out there that you can take from weekly analysis and certainly from a daily. You just need to put the time in to study. If you can study the fundamentals as well, then you will understand why price is more likely to fall or go up on specific pairs, and that will give you a trading edge. On to this week's analysis. Now, the difficulty as we get near to the holiday period is lots of pairs are at extremes at the moment, and this is the dollar yen. It has shot up, and I actually predicted, if you can look at my prediction for 2014 back in the blog back in December, January last year, I did predict this going to 120, so what a clever boy, I've beaten that. But what's happening, the Japanese yen, dollar yen last time stopped in March 2007, that's how long it is since we've been up here, at 12300. Also, the Bank of Japan have intimated that whilst they're happy for their currency to weaken, they do not want to see it weaken less than 125. And therefore there is a danger with lots of these pairs that you're going to get intervention. It's tricky. My partner in a different venture, Fotis, in our managed fund, he was looking to continue longing the dollar yen a few weeks ago when I was getting nervous below 120, and it's kept going, and it's still like a steaming train, and it's off But for me, it's just too extreme. If we got a pullback, and for me the best pullback on this would, logically 120 is an important area, but the better pullback for me would be around 118. You have a lot of previous support and resistance in this area, and therefore if it pulls back to here, then yes, I would long. The dollar is much stronger fundamentally than the yen. The Japanese have agreed to print trillions more to weaken their own currency, and the jobs news on Friday will have helped the dollar on all pairs as well. So we are expecting further dollar strength. Personally, I wouldn't get in now, it's too late for me. Similarly, the euro. Now the euro this week is going to be very complicated because Monday, Tuesday you've got ECOFIN and Eurogroup meetings where all the politicians are together and they could say anything. We've had technically a major break here, and I showed you in recent weeks this trend line goes back to 2007 as well. So this is a major break of a hugely important area, and under normal circumstances I would be all over this. I am interested to short this at anywhere around 12400. For those of you who missed it already, that would be the main area for me. The difficulty is not only the meetings early in the week, but Thursday is the key one. On Thursday there is the TLTRO news release, and that is the targeted long-term refinancing option. Shortened version is how much more money are they going to print, and that will be revealed on Thursday. And depending on what that news is, this could swing wildly in either direction, guys. So anything euro related, personally, I will be out of Wednesday, and I would wait until after that news before thinking of getting involved again. But fundamentally, it's going to keep going down, we expect, and 120 is not an unreasonable next target. Similarly, the pound. Now the pound last week also made a new low. It's continued to drift down from the highs of the summer, and it looks as though we're on for 150, possibly stopping at 153 on the way. Again, the difficulty is, where do you get in? There's a number of options with this. You can use what I call a plan B method, and the plan B method basically is if this doesn't pull back and it simply keeps going, you just look to place your entry 10 pips below the current area. The problem with that is that often, as I've shown you in the past, you get a breakout and price pulls back. And if this was to pull back, say, to 157, even better, let's fib this now at the latest point, back up to 158.80, shall we say, that would be a much better entry for me. So you could just get in on the current move. Personally, I would prefer a pullback. This is the CAD. Now, if you missed last week's move, I've shown you this at the beginning. This is a weekly chart, and this worked perfectly on a weekly chart. Now, we've since had the NFP news come out, which is much better for the US. I doubt that it's going to pull back down, but if it does pull back down again, then 113.20 would be the area for me to get in again. Aussie dollar, another one. It's gone. Where the heck do you get in? And also the Australian government have intimated that they're comfortable with their currency weakening, but they would start to get nervous at 80. So once again, I need a pullback, and the only thing I've got here, and it's not, I like to take a trade for multiple reasons, and this is not multiple reasons. The only thing really I've got going for 8400 is it's a monthly 200 EMA. Price did stop there, and it was support and then resistance, so it has been important, and it's a whole number. So yes, I would be interested at 8400 to short this again. However, the Aussie dollar CAD may be a better option. And this is on a 4-hour chart, and I fibbed the latest move, and I showed you earlier how this has gone many hundreds of pips from my entry. Here I would be more interested because this is more a case of multiple reasons. You have 50% fib, you've got the EMAs, you've got the monthly EMA in there as well, and we're in a downtrend, and we've got a definite support and resistance area here. So I'd be more interested in the Aussie dollar CAD this week. And the same, I would look for an entry at 9600. The final one is the Swissy. This could be a better bet than the euro this week. The Swissy has made new highs. It broke a weekly high, and as I've shown you earlier with the dollar CAD, on that basis you then look for the pullback. Now let's go down to a daily chart. Now you could look for a pullback initially here, anywhere around 97.30, be watching that. I prefer 9700 because it was stronger support and resistance, but that's the zone to be watching if you're trading intraday. If you're looking to trade from a longer time frame and you place a forward order, I would be more interested down at 96.40. The reason being, we've got stronger support and resistance. We also have a trend line in place, and it means that if you place your stop below this lot, so below the 50 and 61% fib, below the EMAs and the monthly 55 as well, you're still looking at a potential, well, it's 1.5, but really you're looking at this now. This could go up to 99, where we were back a couple of years ago. It could even go up for 1-for-1. So the potential risk reward is there for me on this one, and it could be a less bumpy ride than the euro this week. Okay, that's it. Have a good week. Catch you later.